question. And the first thing I'm going to say before I say anything else is that this is not an easy answer. You have to look at your life situation. You have to look at what's going to be best for you. And more importantly, your advisor has to work with you to find something that's going to fit your individual circumstances. But let's get right down to it. Let's look at this question. The difference between permanent and term life insurance is quite substantial. Permanent is going to be something that's going to hold true all the way until you die. Not the most entertaining of topics for sure, but something that is guaranteed to happen to every single one of us. So let's put a plan in place. The first thing I want to talk about before getting too in-depth with permanent versus term is we've got to look at what life insurance actually does. Life insurance is a way to protect your loved ones from the inevitable debts that might incur, the protection against loss of work. It's a way to protect your family and to protect your loved ones against what might happen. We want to make sure that you're providing your loved ones with a lifestyle that is going to be consistent with what they're comfortable with. So in order to do that, we do have to look at permanent versus term. Term insurance serves a great need. It's a need where if that need is a short-term need, for example, a mortgage is going to be something that is eventually going to expire. So as a result, term insurance is probably going to be your best fit for that. However, permanent insurance, on the other hand, is something that you can actually use as a savings tool. At some point, you might decide, I want to cash this policy out. There is going to be a cash value associated with that policy there. Now, the easy way to look at this is owning versus renting. You could rent a policy, use it if you need it. You're going to get a payout. It's a much cheaper option. On the other hand, you could own that policy. You could know with 100% certainty that you have that guaranteed income coming in if you ever need to cash that policy out. In addition, it's a great way to save. What happens if you put your money into an insurance policy? Well, you're usually going to get dividends. Those dividends can be cashed out every year. They can be put into a savings account, or they can actually be reinvested back into the policy to make sure that you're growing as much insurance as you possibly can. So the main thing that you have to think about when you're thinking about term versus permanent insurance is it a short-term need or is it a long-term need? If it's a long-term need, something like your funeral expenses, that's something that you might want to have something permanent in place. However, if it's a short-term need, again, like a mortgage, car, something along those lines, it's going to be something that you might want to look at term. Now, the downside of permanent insurance, unfortunately, is that it costs substantially more. But what you're paying for is you're paying for that cash value that you can always cash it out. You're paying for that security, and it's actually transferable. You can transfer that policy over to your son or daughter, child, aunt, uncle, whatever, so that they could be the beneficiary on that policy. So when you're ready to look at permanent versus term insurance for your individual circumstance, give me a call, 204-955-2879, or visit my website, ekunmalcolm.com. I'd love to sit down with you and interview with you for that job as your financial advisor. Give me a shout when you're ready. I'll talk to you soon. Thanks.